FX Live, brought to you by the National Institute of Foreign Trade.
Hello guys, my name is Matthew Longtong and I welcome you to the official YouTube channel of the National Institute of Foreign Trade. Today I'll be showing you a simple strategy you can use to grow your small account as well as improve the performance of your big accounts. But before I do that, if you are new to the channel, then you can like the video, subscribe and turn on the notification bell, as I'll be glad to take you through an interesting and a profitable trading experience this year. Alright, I believe you've just done that. So let's dive into the business of the day. Well, this strategy was built based on Newton's first law of motion, which states that a body remains at rest or in motion at a constant speed in a straight line unless acted upon by a force. When we apply this law to forex or any financial trading instrument, it will mean that price will continue moving in one direction at a constant momentum unless acted upon by an opposing force. In this case, these forces are fundamental in nature. It could be a big news that could affect the economy. Some examples of these forces are GDP, CPI, NFP, and lots more. Sometimes this news could be a big boost to the market trend, but they are most likely a big shift in the direction of the market. Alright, to cut the long story short, we are going to apply two indicators to our chart, and this indicator is going to tell us, one, the direction of the market, and two, the momentum at which price is moving. For market direction, we'll apply the 500 exponential moving average. Then secondly, we'll apply the MACD for price momentum. Alright? So according to the principle, price will continue moving in one direction with constant increase in momentum unless there is a big fundamental event that could take the price to the opposite direction. Now we can apply this principle to forex or stock in order to make profit. Alright, so at the end of the day, our goal is to make profit. Alright, we are going to identify three things. Number one, market structure. Number two, expansion. Number three, retracement. The principle says that price will continue moving in one direction with a constant increase in momentum. So it is important to identify the market direction. That is the market structure before we can think of jumping in for a continuation. The market generally have four structures. It could be an uptrend, a downtrend, a ranging, or a choppy market. So it is very important to identify the market structure first before looking for an entry. For the direction of the market structure, the principle says that our price will continue moving in the direction of the market structure. Alright, unless there is a big news that will change the market direction. Remember, the market is too big for just any news to change its direction. So it must be a very vital news, like a very, very big news. When you look at previous market events, you will discover that sometimes price keeps moving in one direction for 3 or 6 months. You see that? For 3 or 6 months. Keeps going in one direction for a very long time. So for this market now, if you have been trading this market USD JPY from April 2022, you could have been looking for buys from April. You would have only been buying in this market from April till November. from April to November, you could have only been looking for buys in the USD JPY. Alright, so the market sometimes can stay in one direction for a very, very long time. Alright, so so if you have been following this particular trend, um, you have only been looking for buys, and this will make your trading psychology more efficient and less stressful. Yeah, less stressful. Now you may want to know how to identify the market structure. Alright, I'll show you a very simple and efficient way I identify market structure using the 500 exponential moving average. Alright, this is it. When price drops below When price drops below the 500 exponential moving average after a very big fundamental news, then it suggests a shift to the downtrend. Remember I said after a very big fundamental news. So the news, fundamental news, most especially news like GDP, CPI, and NFP. Alright, so they can be a very, very big news. So if you can't identify a fundamental event that push the price below the 500 exponential moving average, then you must wait for the market to hold the price below the 500 EMA for at least 2 days before looking for entries. Likewise, when price goes above the 500 exponential moving average, you do the same thing, you apply the same style. All right, so after you have identified the trend, look for expansion, a movement of price in the direction of the trend with increase in momentum is called expansion. A movement of price in the direction of the trend with increase in momentum. So that a movement of price in the direction of the trend with increase in momentum. Increase in momentum is called expansion. Movement of price in the direction of the trend with increase in momentum is called expansion. All right, so the last one is retracement, a movement of price in the opposite direction of the market trend with decrease in momentum is called retracement. So a movement of price in the opposite direction of the trend with a decrease in momentum. Movement of price in the opposite direction of the trend with also a decrease in momentum is called retracement. All right, okay, you are going to experience a lot of expansions and retracement when price goes below or above the 500 exponential moving average. Now look at this expansion. Now look at this expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement, expansion, retracement. See, more like humans, we have been breathing since the day we are given birth to, and we will continue to breathe until the day we die. So also is the forex market. It has been breathing in and out since the day it started and until the end of the world. It will never stop. All we have to do is to know where the market is going and then follow. Now you may want to ask, how do I know where the market is going? Or probably now that I've known where the market is going, how do I come in? All right, remember I said a movement of price in the direction of the trend plus an increase in momentum to the direction is called expansion. All right, it's called what? Expansion. So, okay, since your target is to follow the market trend, then you will be getting in when the market is about to start expanding. When the market is about to start expanding, your target is to follow the trend. All right, so you are going to find expansions when the market is about to expand, then you start getting in. All right, don't worry, I will show you a simple tool you can use to know when the market is about to start expanding. Fibonacci retracement tool. The Fibonacci retracement tool is one of the greatest tool you can use, or one of the simplest tool you can use to identify possible expansion in the market. You are going to apply the Fibonacci retracement tool to the most recent expansion in the market. I believe you already know how to use the Fibonacci retracement tool, but if you don't, just let me know so I will make a video to show you how to use it. All right, we'll be using the 0.0%, 61.8%, and the 100% retracement levels. Okay, let's look at a quick example. When price went below the 500 exponential moving average, the 500 exponential moving average, we had expansion. So we had expansion plus an increase in momentum, in the downward momentum. So we will have to apply the Fibonacci retracement tool to the expansion so that we can measure the retracement. All right, so apply the Fibonacci tool to the expansion. Price expanded to the downside plus an increase in the downward momentum. Then momentum started dropping from here, started dropping. You see that in the price, started dropping, having a retracement until it finally loses all its momentum to the downside. So this is a retracement. So all we have to do is to apply the Fibonacci retracement levels. The Fibonacci, apply it to the expansion. This is the first expansion. Apply it to the expansion. All right. So we apply the Fibonacci retracement to the expansion. We drag it from the starting of the expansion to where it started having retracement. All right. So you see how price retraced back to this, to the 61.8% zone. Okay, so you are marking it as a zone. All right, not just a line, you are marking it as a zone. Okay, so the 61.8% and the 100% Fibonacci levels will give us the perfect zone for entry. So all you have to do is mark out the 61.8% zone and the 100% zones, and wait for price action rejection candle pattern on any of these two levels, then take your entry. All right, so you mark out the 61.8% zone. Mark it out. This is the 61% zone. You mark it out. I told you guys we are going to mark it as a zone, not just as a line. So you mark it out as a zone. See that we'll pick out this. This is the first line is the 61.8%. Now we are going to pick out these bottoms here, because this is a very significant zone. So we'll pick it out. So the 61.8% has given us an area, a possible zone where price can retrace. So we'll pick out this area as zones. All right. Then we'll pick out the 100% levels also. We'll pick it also as a zone. We'll pick it up. So we have also picked out the 100% retracement, Fibonacci retracement level as a zone. All right. Now, doing that, we can see that price came back, had a retracement up to the 61.8% zone, and then showed a rejection to the downside. All right. So this is very simple. When you know how to apply this tool, then you will get a very good entry. You can see how price dropped down and continue this movement. After the expansion, price had a retracement back to the 61.8% zone, and then started showing what? Rejection. So you start taking your entry and continue the trend, because the strategies, the principle says that the market will continue having a downtrend unless there is a very big news. So while you are taking your entry, all you have to do is to check if there is a news, if there is a vital news that can counter your direction. Okay, but if there is no vital news that can counter your direction, then just let your trade flow until it hits your target, until you are satisfied with your profit. Okay, so that is it. Very simple as that. All right, so let's look at one more example. All right, now just look at price goes above the 500 exponential moving average, and then we observe an increase in the upward momentum. All right, which is our expansion, goes above the 500 moving average, and then there was an increase in the upward momentum, telling us that the market is pushing price to the upside. We can see the increase in momentum, or the volume increasing up, which is our expansion. Then it got to a level and started losing that momentum. So once price start losing that momentum, that could be your potential retracement. All right, so all you have to do is what? Insert your Fibonacci retracement. Retracement tool, apply it to that, and wait for price to lose all its momentum, and then show rejection in the 61.8% or the 100% zones. All right, so like I told you guys, price is above here, and then there is an increase in the upward momentum. This is our expansion, so we apply our Fibonacci level to the expansion. Okay, so let's do that quickly. This is our Fibonacci. We apply it to our expansion. All right, so this is the expansion from here, and this is our retracement. This is the first retracement. The first retracement didn't get to that zone. Then this is our retracement. The first retracement, you can see this first retracement. Let me zoom it so you can see it. So you can see that the first retracement, price started expanding and there was rejection, but finally did what? Lost its momentum. So we took our first retracement here and price continued what? Pushing, lose all its momentum, right? This is the first expansion to the upside. Okay, this is where the expansion started. This is it. This is where the expansion. It loses first the downward momentum, push above the 500 exponential moving average with this increase, this particular increase. So this is where we saw the increase. This is it at this point, not this one. Okay, so while this one was happening, it wasn't having, it has not started pulling an upward momentum yet. So wait for the price to pull the upward momentum, then that is when we start looking for our retracement. So this is where the price started retracing. So we drop our Fibonacci retracement tool to the, from the bottom where it started expanding to where it started dropping. All right, so we drop our Fibonacci tool, we drag it up from the bottom to the top, then we wait for price to retrace to the 61.8% zone. All right, remember I told you guys, let it be a zone. So we'll mark it out. We mark out this zone. We'll mark out this zone. All right, we'll mark out this particular zone. Okay, then we'll mark out the 100% zone again. We are marking out the 100% zone so that in case price did not hold the 61.8%, then it will likely hold the 100% zone. So we mark out our zone and wait for price to do what? Come back and show rejection in the 61.8% level. We take our entry. Now look at this. Look at how price came back and rejected the 61.8% and continue pushing to the upside. Look at this big push. All right, one interesting thing with this strategy is that you are going to risk very little, but when you win, you are going to win big. When you are risking little, but when you win, you are going to win big. So imagine this movement from here to this up. This is over 300 to 400 pips, and you are risking highest 30 pips here. You are going to be risking just like 30 pips or 40 pips here. All right, so if you are risking 40 pips here and you catch up with over 300 pips, guys, that is a 1-to ratio. 1 2 3 4 5 6, like a 1-to ratio 6. Okay, so this strategy is very, very lucrative, guys. It's very, very lucrative. So this is it, as easy as that. All right, just try back testing this over and over again, and I promise that your trading approach and psychology will never be the same again this year. Consistency is the key to every success in life. Keep doing this and soon enough you will be a master in it. All right, thanks for staying through, and please don't forget to subscribe and turn the notification bell on for other interesting content coming in from the National Institute of Foreign Trade. Thanks, and see you guys soon. Bye.